Good morning, it's Harvey Jackson. Just going to get through some of the sticking points that seem to be on the USMCA, aka CUSMA. I don't know what it's called in Mexico, but obviously different terms. But I'm just going to play this excerpt here from the trade partner in the US.
Ambassador Greer, can we just ask you, what's the status of talks with Canada right now?
So right now with Canada, they have a new chief negotiator that will meet our chief negotiator. I'm in contact with Dominic LeBlanc, who's Minister of Commerce in Canada. We keep in contact. They express an interest in having some kind of alternative deal. Right now, again, as I mentioned earlier, we're quite focused on reshoring supply chains related to automotive, steel, aluminum. We shipped 300,000 metric tons of steel more last year than we did the year before. Made more steel than Japan did last year for the first time in decades. That's what we're focused on. If Canada wants to come in and participate in this type of reshoring we're trying to do, we're happy to have those discussions.
What do you mean by that, participate in the reshoring? What do you mean?
Well, what I will say is when we go to other countries and we make a deal with them, the other countries, they agree that we can have a tariff on them, that we can have a protective tariff to protect our industries as we try to reshore, and they open their markets to us. If Canada wants to agree that we can have some level of higher tariff on them while they open up their markets to us and things like dairy and other things, then that's a helpful conversation. We have very open lines of communication. We'll keep talking. I tend to try not to negotiate in the press or anything like that, and we have discussions ongoing. So if something happens, I'll let you know.
But isn't the point of USMCA so there aren't tariffs? Isn't that the point of USMCA?
The concern about USMCA is that when we put it into effect, the hope was that there would be more critical supply chains reshored to the United States. There'd be more U.S. content. We actually ended up seeing cars increase from Mexico and that kind of thing. There's a lot of good in the deal, but there are a lot of things where reshoring didn't happen fast enough. U.S. content didn't happen fast enough. We think that if we want to have that deal, you need to have better rules, stricter rules to make sure that there's more U.S. content in what we have. We don't want a situation where countries like Vietnam or China can send a bunch of stuff to Canada, do a screwdriver operation and send it across the border to the United States duty-free, right? And we know that Canada has talked about having closer ties, economic ties with China. I don't want a situation where Canada's being used as a backdoor for Chinese goods. There are a lot of issues like that would have to be resolved.
Mr. Fair, can I ask you about these?
So again, the dairy gets mentioned there, and he had another interview, and he mentions dairy as well. So this next is Egg Resource. They're posted on YouTube, and they're talking about the RINs and what they're seeing, and I thought it was interesting to post here as well.
Is doing what it has to do to get rid of this monster crop, which we at Egg Resource think is over 182 million metric tons. On the other side of this, however, is U.S. I'm sorry. Let me just talk a minute about ship lineup here. The U.S. ship lineup that we follow every week at Ag Resource. This, of course, through Friday. You can see here that the U.S. ship lineup is now over 260 vessels waiting, 15.4 million metric tons. This is following the 2022 lineup fairly closely, but again, I think we'll exceed it based on the size of the crop in Brazil. So very strong export lineup. This showing that, the United States is now seasonally on the backside of the shipping pace. This chart aptly shows that the same time frame, February 19th or 20th. Notice that U.S. Vessels waiting to load soybeans are now in seasonal decline. And we would expect this to continue as we head into the end of the crop year. So as the Brazilians ramp up sales and exports of beans, we're on the other side of that. And again, if China does not take its 8 million metric tons of U.S. soybeans, Ag Resource needs to start looking at dropping its export estimate again on soybeans. I believe we're in the early stages of that, but we'd like to get through this week and early next week to make that determination. As you think about the other supportive factors for the soybean market, and yes, we have that April meeting in China, but we also have this RVO announcement. I'm told this morning the documentation hasn't made it to the White House yet from the EPA. That is expected any day now, but the soy oil market has run up trying to anticipate when an RVO decision will be announced. Now, the market's optimistic on RVO. They're looking at this and saying, President Trump, if he can't get it going on trade, he's going to have to do it domestically. And so he may do something important with RVO. Maybe 5.2 to 5.6 billion gallons of RINs would be the equivalent of where we're thinking. But on the other side of that, we do believe that a whole RIN will go to foreign feedstocks. We also are unknown in terms of what will happen on the SRE reallocation. our mindset will be there will be a compromise. So it will not be one way for the U.S. farmer. There will also be something in here, of course, for the refiner and the blender, which accordingly is looking. But in saying that, the soybean oil rally has taken the crush margin back to $2 a bushel here in the United States. Very fancy, very strong. You can see historically, we're getting back near some highs. We would imagine that Latin America, Brazil, and Argentina are also ramping up their crush rates very quickly here on profitability. And so the world will see a fairly sizable amount of soy products going forward. Argentina this morning has soy oil offered 10 cents underneath the U.S. Futures market and underneath the Gulf for, of course, the April-May timeframe. So the U.S. has no chance of getting any soybean oil demand abroad. And in soy meal prices, they're also.
So he just said it there. The soybean oil coming from Brazil is 10 cents cheaper. It does look like it's going to have some upward battle here, but very optimistic about this RVO and the EPA presentation and getting released to the Congress there, or the House. You can see here just the pace where Brazilian soybeans harvest is currently at, and you can see that it's only at 32, but current pace does give you, by the time you get into second week in March kind of thing, you would be in the 50s. And of course, as he was talking about the vessel lineup, but there's also truck lineups trying to get rid of some of this large crop of beans. We've seen that in some other publications. India braces for unusually hot March, and again, just looking at weather modeling, looking that far ahead is not always that accurate, but this could only be a good thing for our markets over here if India gets impacted, just for the fact that they might lighten up some of their tariffs to protect their farmers if they have a smaller crop of any one of those. Quick look at the weather. It looks very wet in this area, and you can see that in this next, you see this rolling snow bands going across there. It's actually above normal for this 8 to 14 day precipitation outlook in that area. And here's the snow. There's actually going to be snow down there as well. So whether that's going to impact any of the winter seeded crops or not, it's not generally in that area, but it is dry there. So moisture is needed. Quick look at the markets. Canola currently down $6.50 on the front month. On May, on March, it's only down a half. So we're starting to narrow up that gap between the March and May rolling out. Rapeseed is down 50 cents a euro per ton at 482.50. Soybean oil is down half a cent a pound at 60 cents 22. Palm oil is down 48 ringgit. Crude oil is down $1 at 64.34. Diesel fuel is down 2 cents. Soybeans are up 2.5 cents, and your spring wheat is down a couple cents, and your hard red winter is just up fractionally on the front month and up a penny on the Chicago. Corn is up a penny and 3/4, and the Canadian dollar is just slightly down. So just have a quick look here. You see this long tail here. So if you're going to look at where's it going to break, that is not even broke the scared rabbit line. If you're going to have a scared rabbit, it's close, but not quite. It would have to drop a little bit more before you're actually going to say, here, we're going down, but it is red at the moment. We were red yesterday, but we closed basically flat yesterday at the end of the day. Same thing with the, if you were to put a support line on there, it hasn't broke that support line. Rapeseed, good. It had a wide trading range yesterday. Now it's down slightly as well. If you were looking at the price differential at $94, that doesn't even cover the freight to get to Europe right now from wherever, from Canada. This is your, here's your soybean oil, and then you've got your diesel fuel futures. That's the biggest increase since the beginning of the year. And then you've got your crude oil, soybeans, and your soybean, or the canola oil, only with a fraction of the gains. So you got 12 to 10% of the crude oil and your oil seeds versus your manufactured products of the seed and the crude oil. Soybean oil futures. This is just your leg up here. It's got quite the run. Same thing with soybeans. Now we're nearing the same highs that we made back in November here. Crude palm going the opposite direction. So if you're a value buyer like India and China, you would be buying this product, not the other products for sure. Light crude oil, Still above support line if you're going to draw a support line in there, but a deeper red day. So obviously there's some risk off in the India or Iran talks. I think they're in their third session to try to curb the nuclear talks at all. New York Harbor, it laid down there as well, but we're at the top end of those peaks there for sure. Have a look at wheat. Nothing to see here. Way below that 200-day moving average. Basically got to that support line and then failed. And then if we're looking at where is there going to be support, we're looking for Kansas 200-day moving average to give this move back down on the Kansas City market to get support from the 200-day moving average. Same thing with the Chicago. It needs support from this 200-day moving average to remain bullish. European French wheat, nowhere close to the 200-day moving average. Here's your corn, and nice move up in this channel, up against some of the short-term moving averages. But I also have this as a resistance line, and we're up against it right now. And we would have to break out. We'll probably get closer to that 200-day moving average, which would put us in the middle of that range that we were in the fall. That's all I have for you today.